Good morning. Let me remind you that trading is risky, not appropriate for everyone. And past performance, good or bad, is not necessarily indicative of future results. Therefore, stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. What are you guys doing up there? Is that better? I'm going to give you a big hug. That's not that good. Better? Not really. Anyways, hi. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. We want you to succeed. You are the best client in the entire world, and we want to make you happy. I'm here to share technical analysis, fundamental analysis, and other things that are required to be successful as a foreign exchange trader. I've been doing this for, 15 years. Before that, I was a venture capitalist. Before that, I was a successful entrepreneur. Before that, I worked at NASA. Before that, I ran a company of 3,000 people. And before that, I was a teenager. So that's it. Tell me about you. So anyways, hey, let's do some foreign exchange trading. Let's go through, bang out some technical analysis. We've got a lot of fundamentals that have been going on and on and on. Brexit, all that kind of stuff, yada, yada, yada. Rob says, get the mounts. Well, these are different. They're flat against the wall. So the other ones were this far away from the wall, right? These are flat against the wall. It's not bad looking, right? So here's the thing. I had issues with ports and video cards and stuff not communicating because they designed it to run a certain amount of screens, and then I'm trying to, on top of that, run these 4K screens, and they're like, no, that's going to cause problems. But I'm in talks with this group now that built this custom PC. I didn't really tell them I want to run 4Ks. I just thought I could. Well, now they're like, well, maybe, but probably not. But they're going to build me a machine that'll run 6 4K screens. And they're like, okay, it's going to just absorb and suck power because it's so many pixels. So they're like, we got to do everything custom for that. And I'm like, really? Because I have talked to other companies, and they're like, no, you can't do that. I'm like, why not? Just add money, right? So anyway, so they're going to do that. Yeah, all right. So thank you, Ron. I gotta. So apparently that whole system that's built in doesn't work. So I'll stop scheduling meetings for now until we figure that out. So anyway, so the plan now is new machine, yet another trading computer. But this 1080p, this 1080p, this 1080p, this 1080p, this 1080p, this 1080p, and this 1080p. I think I'll take those down, and the new machine will just run 4K, 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 and I'll have 543 vertical, which kind of sucks now because I could have bought 550s or 555s. It would have been taller, but I wanted them to be the same as these 3 stacked. But so anyways, that's where I am on that. Thank you for asking. Yeah, sorry, David. Like I said, there's a button in here that says schedule the next webinar. But the weird thing about YouTube, if you schedule a webinar, it uses different software than if you just do it live, like click and start. I don't know why, but that's how they do it. Yeah, one of them. So anyways, that's how all of that went down. Good, bad, and the ugly. That's how all of this has gone down. So I'll waste time and money. But the thing is, if these guys can do it, I got a good group that'll custom make you a beautiful trading machine. Okay. So if you're looking for a new computer rig, maybe I can hook you up. That's all I'm saying. All right. So okay. Let's talk about this. Oh, let's go over here. So okay, let's talk about this. Let me get my drawing tool. So let me ask you this. Was I wrong on this setup? G'day, Watson. Oops. Was I wrong? The thing is, what is right and what is wrong? Okay. Is this resistance? And the answer is yes. Now, it's monthly R, which is not a major, that doesn't concern me often. But when you have a monthly R with a weekly M4, it does concern me. Quite a bit, in fact. Like, for example, the reason is this is a buy zone. Look at this. That's the actual bottom. That predicts this. So what I've seen in the past, and including myself, is that when things don't, I don't say go wrong. I've seen in the past, in particular with me, myself, when you make a decision like this is resistance, and it keeps going. I used to, like, way back in the day, I used to really beat myself up about that. Okay? And I'd feel like, oh man, I was scared, or I left money on the table, or I shoulda, coulda, woulda. But I felt bad, like I made, like I did something wrong. And it took, I don't know, I guess slow level of maturity to realize that it doesn't matter what happens after you do what you're supposed to do. And it comes down to a probability. Right? So I look at this, and let's say I look at this and we're playing Russian roulette, and I know there's 3 bullets in the chamber out of 4. I think most of the time, under normal circumstances, I would not like to start. I don't want to play. Let's put it that way. It's not like it's not even I don't want to go first. I certainly, because what if he gets it right? And then I would. So anyway, so I just don't want to play. It doesn't matter what the outcome is. I'll let someone else play the game. Because it comes down to probability. Right? And there's a high probability in most cases, on the long run, that this will be a significant level of resistance. And that's all that matters. And what happens after that doesn't matter. You shouldn't be involved. If you identified that as key levels of resistance, and I would say that that's pretty key, then you should manage the risk. What happens after that? Who cares? Okay. So, moving on, if you believe this is doing the monthly trade, and we've already discussed this, but let's just review it. If you bought down here, your target is up here. Okay. So we don't know how we're going to work our way up there, though, do we? Okay. It could be like this. Okay. But it could be like this. So if you're not in the trade, if you managed your risk appropriately, and you said this was pretty risky, so you should take your trade off, now you're just setting up the next trade, which is pretty easy, right? So you're like, well, if it heads up here, I'm going to look for a reversal pattern. I'm going to trade down. But if it collapses off the R2, weekly R2, probably like Monday, I'll do something like this, right? So you just adjust. So you're like, oh, well, plan A, you look for that, right? And plan B is, I guess you got to do it more like this. Right? Or more like that, let's say. It's probably more realistic. Okay? You see what I mean? And you don't beat yourself up. There was a time I remember, probably my first real rough patch of trading as a full-time trader. Actually, it was probably after that, probably my second rough patch, maybe my third rough patch. Somewhere relatively early in my career, I realized that no matter what, I was not happy with my trading. I was not happy being a trader. And I realized that if I lost money, I was really upset that I made a mistake and I lost money. But when I made money, like let's say I took profit here, and then I saw it keep going beyond my target, even if this was super logical and ultimately the right thing to do if you're a risk manager, I was still not happy because I'd see this and I'd say, oh, I should have known. I left all this money on the table. And no matter the outcome of my trading, I was either disappointed or pissed off. Pardon my French. And I was just never happy. And I realized that was also going to be a risk factor. It was going to eat away at my, at my psyche. So I had to really change that attitude and look at it like probability and say, well, my job is to enter good trades, buy at support, for example, enter trades and stuff. And that's good. And then you catch pullbacks. That's great. But when you get to a level where you believe you have real resistance, your job is to manage that as you see fit in that situation, in those conditions. And after that, it doesn't matter because you're not in, so it doesn't matter. And these pips, I would argue, were expensive pips because they were not likely to happen on the long run. There was at least a plausibility for this first, right? So whatever, just walk away, walk away, walk away, right? So that's that. Cool modi. Okay. All right. Okay, we've run a decent course on this. We're back up to the 200 EMA, or not EMA, 200 fib level. Okay. Now what? Well, once again, you're at price resistance and you're at market resistance. This is PR, this is MR. Should you buy? No. By the way, the ultimate target is right here, and that's set by this. Okay, but is this now a time to buy? No. So what's plan A, plan B? Plan A would be Pachow. Actually, it'd be to here. Actually, that would make it there. So let's clear that out. I don't think that's going to happen. So I think this would be more realistic on a down. And that gets us to here, which gets us to probably the last day of the month we get there. Okay. Plan B would be, I find it even hard to believe. I can't even draw a plan B on this. But let's say it breaks out. Hang on. I can't even draw a plan B. It's not going to do this, but let's say it would be more realistic to like that. Like, why would we go up there? Like, it just doesn't make sense to me. So, yeah, we've rallied hard. Great. So what? So I think this is really the that seems plan A and plan B. Okay. And of course, if you're a bear, let's draw that. A bear is like this. Okay, until it breaks. I'm very musical. I love music, and I love all kinds of music. I always have. I was invited to audition for the Canadian Boys Choir. Then they're like, okay, he likes to sing, but he might be deaf. Or something, because he likes to sing, but there's something wrong with his voice. It's like deformed or something. As soon as he starts a melody, it gets all flat and weird. But anyways, that's how the story goes. Yeah. So anyways. Yeah, so I used to like try to take dates to the opera, and it wasn't always that great back in college, right? So when I was a young man, sort of after college, I lived across the street in a top of a, I don't know, skyscraper. I don't know. And beautiful view of San Francisco, but on the other side of the building was the San Francisco Opera. So on occasion, I'd just put on a nice suit, walk over across the street, grab tickets to the opera, sometimes standing room tickets. Yeah, it's sort of a secret in San Francisco where you can go like within an hour of the show starting. You can buy standing room only seats. There's no seats, right? So you tickets, and you walk in, and under the mezzanine balcony at the back, there's just an area where you can stand. And sometimes I'd go there, I watch the opera, and I'd get my eyes would get all teary. you know, I just love music. But you know, Carmina Burana is not a good first date in opera. All right, so pound dollar. Boy, oh boy, oh boy. Just so remember how some people argue. So some people argue, not as many anymore, but that all of this is a random walk. But that's pretty amazing that based on what happened here, this is a conservative high, this is a conservative low. And you're like, so I look at this and I think like somebody's paying attention, right? Even after Brexit votes and stuff, someone's paying attention. Right? But, is this trending somewhere? I don't know. Do what you want to do in this one. Do what you want to do. I don't have strong conviction on this one way or the other. Oh, what are we doing over here? Right? Do you feel strongly about this? One of the things I think we talked about earlier was maybe an S1 R1, but even look where it wicked. Going back to like someone's paying attention, that wick is the projected bottom based on what happened here. This is the projected bottom for the month, and it took that. So maybe I guess you could argue a range that we're on our way from M1 to M4 at 129.75. So let's say this is basically going up to 130. Yeah, okay. Yeah, I don't have strong conviction for it. It's only another 100 pips. So like, where do you enter now? No. Right? So I just look at it like, okay, I get it. But there's got to be something better to do now, right? Will I be trading today? Actually, I'm going golfing today, maybe. I haven't even decided. I got a meeting that's supposed to happen today, and I need to check. So I don't know if I'll have time, but that's why I'm dressed all goofy. My wife's like, "You dress weird today." I'm like, "Yeah, good morning, sweetie. Good morning." I might go golfing. I don't think I have time. I'd like to pretend I can. Right? I love to pretend I can. Problem is, I have all these friends that live around me. They're my age. They're 40 and 50-year-old men. None of them work. Like, none of them ever work, right? They don't have jobs. I mean, they don't work. So they're like, you got to come golfing. I'm like, when are you golfing? Tomorrow at 9 a.m. I'm like, 9 a.m.? Oh, I trade, right? But I got to be careful because then after years of saying no, they stop asking. So I thought maybe I'll try today since I don't have school. But I don't know. I have my doubts. Okay. What can we learn from this? Well, here's the top of the market, right? That predicts the bottom of a market here. Isn't that cool? Okay. Give it a couple clicks to really look at it. Okay. Check this out. Lower low, lower high, lower low. Beautiful. Isn't that great? Right? Breakout. So let's clean this up and we can look at it as a breakout. Okay, how do you trade a breakout? Of course, I do this every day, so I know you know, but let's do it. It's good to refresh. Okay, how do you trade a breakout? Look, because I actually teach you, like, the question isn't even how do you trade a breakout, well, I guess it is. So this is a range, right? So you start the range, okay? And when you believe it's broken out, it's the retracement that you're looking for, okay? And this one actually grabbed the monthly central and the weekly central. Pretty good. Now, you see this top? It's also the MM2. Oh, no, sorry, MM3. That predicts MM1. So let's find MM1. MM1 is right here. So MM1 is equal to, let's do it this way. Still can't see it. Can anybody see that? 81? No, 80. 88. 8800, I guess. Is that right? No, 8801. Yeah, 880. So let's do 880000. Just above it. Okay. Yeah, you could join the live trading group at FX Bootcamp if you want to sit with someone and trade. Okay, it's not in a free webinar. Right, fxbootcamp.com. There's a live swing trading and day trading group, but you have to go. There's performance coaching, you know, which is one person actually working with you. You have what, 30 hours of videos to watch, plus the London session, plus the New York session, plus the swing trading session, which I'm doing tomorrow. So I can't golf tomorrow, for example. So yeah, if you want that kind of stuff, why don't you sign up? It's not that difficult. Okay, so anyways, that's moving. So there's your pound. There's stuff going on. There's some easy pips. There's some expensive pips. Be careful what you do, all right? Good morning, by the way. Thank you for attending. I don't know if I've thanked you recently, but thank you. Make sure you subscribe. Make sure you do the little thumbs up. Okay, guys? Do all that kind of stuff. That'd be great. That'd be wonderful. What should I do with this computer if I have to buy another computer? What do I do with this computer? It will run 6 1080p screens just fine. It's got 2 terabytes, 12 cores, 64 gigs of RAM, and I'm not going to use it. Am I going to donate it to charity? What would a charity do with this thing? They're like, oh, this is great. We could do all kinds of stuff. Now, most people will say, well, where do I have 6 screens? Like, give me 6 screens. And then, like, they just normal people wouldn't know what to do with it. Mike wants a bid. I mean, it's not a bad idea to actually do more like a contest. Yeah, but the problem is, then I got to ship it to South Africa. And if I ship it to South Africa, the first guy in customs at the customs border is going to steal it. Thank you for subscribing, by the way. So that's that problem, right? Hey, Emilio. Yeah, maybe call like that. Yeah. Yeah, years ago for Christmas, I sent my mother a bracelet with pearls and diamonds. Never showed up. Even Canada. All right. WTI. Still inside the range, guys. Remember, the plan here is let it break. Right? That's how the story goes. hang on. So actually, this is drawn on a little dip which occurred, but it's not really. I'm looking at that like I don't like that trade plan. What I prefer in this situation is this. No, Azabu, I think most of it's already happened as well. Technical analysis qualification. What is that, Lindsay? Give me an example and I'll let you know. Not sure if I understand. Okay, taking a look at this. Just coming down to a bottom, here's our indicated floor. And it's gone up to our indicated ceiling. I wonder what happens next, huh? I think we should just update this as a range. A technical analysis qualification seems pretty interesting. So when I'm done with my 2 degrees, like actually I had a conversation with my buddy yesterday, came over in the middle of the day, smoked a cigar with me because nobody has a job. Nobody works. It's not like they don't have a job. They're retired, right? So these guys are 45 and 50 and nobody works. So anyways, so he came over and we were talking about it. He's like, why are you even doing the degree besides going to Harvard? I'm like, well, you know, I'm trying to be a role model to my children, and I like doing my homework when they're doing their homework. I like crying about my exams when they're crying about their exams and all that kind of stuff. So yeah, I thought you were going to the CFA kind of thing. I don't know if that's technical, but I'm getting there. So anyways, so I said, well, you know, if I decide to leave Forex, which I don't really have plans to do, but let's say I did, what would I do with my life? Well, I'd like to run a bank, right? And about 2 years ago, a recruiter from SunTrust Bank, which is the big bank here in the south part of the United States, that basically owns Atlanta. They contacted me directly and they're like, hey, would you be interested in running our foreign exchange department? And I'm like, well, I'm running the Trader's Way currency trading department. Why would I run the foreign exchange department for your giant, you know, $50 billion, $100 billion bank? But it made me think about it, right? It made me think about it. Like, that's really cool. How often does that happen where a major regional bank calls you and says, hey, would you like to run our foreign exchange department? I thought about it, like, what are they going to pay me? Like $250,000 a year or something? I'm like what? So anyway, so I politely thanked them, but passed. But then I thought about it, like, well, that's interesting. It's an interesting thing, right? And it was right around when I was starting Harvard. So I thought, okay, well, cool. I could get my 2 degrees. So my first one is in macroeconomics and the other one is in financial management. So that's cool. Those are really good degrees. And I thought, you know what, I should bang out my CFA, a Chartered Financial Analyst. And that's really complicated. That's like an MBA. If you want to work in a financial institution like a bank, they actually ask for it. They're like, we prefer CFA qualification. Like MBAs are kind of worthless, right? Like, you know lots about nothing. But in a bank, they want to know specific. Okay, do you have a finance degree? Do you have an economics degree? Okay, yeah, required, great. And then are you a CFA? They really want that CFA. And it's 3 different tests. And you know, like level 2, I think you're calculating convexity of bond yield curves and stuff. And it sounds really fancy pantsy stuff, right? But you have to really be able to do this. It's not fluffy level of analysis. It's pretty hardcore. So Google bond yield convexities, right? Um, great. So why not bang that out? Just because you probably want to, right? And then lastly, after I'm done with Harvard, I mean, once you have 2 degrees from Harvard, what are you going to do? Get a 3rd degree? At some point, there's a diminishing return, right? So, but I did find something at Wharton, which is another really good business school. And Wharton has a money management. It's not like a degree; it's more of a certificate. But it's a class you can take on, understanding portfolio theory and all this kind of stuff. Really easy stuff I could do with my eyes closed. But it'd be interesting to say, from Wharton, I got this certification saying, portfolio management wouldn't hurt, right? Especially, so then that kind of leaves me like if I ever did want to run an entire bank, I would have everything that's required. Not that I want to, but if I ever was in that situation, I'd have everything you'd possibly need to do that. But I think it still would be better to just run your own fund and make 10 times more money, right? But so let me just finish my 2 degrees at Harvard, right? Let me just get through that. All right. So EuroCAD, okay? Swing traders. There's your entry. There's your exit. Isn't that nice? Straight out of the playbook. Okay, that's a weekly swing. The monthly swing is up here, and the target is, that's not it, is it? Oh yeah, it is there. So I already have it marked for the swing traders. Cool. So the target from January 1st was sell there, and the target is here. The weekly is sell here, take profit there. Isn't that nice? So the macro trade is this. The micro trade is, just simply this. Okay? And if you like these things, when I bring them up and I say, well, this is just from our swing trading group, maybe one day put it on your to-do list. Maybe you should consider getting, real training and maybe consider joining the group. Just saying, it's an option to you. Okay. Oh, you got that one, Kyle? Whoop, there it is. Good job. Jeremy Willikes, you know what I want? I want 25 traders that can prove to me that they can just simply trade a bias. Okay? Alex, go to FX Bootcamp. Go check it out. I want 25 people that just trade day in and day out, week after week, month after month, year after year, trading a bias they're assigned. So if I say you're going to buy euro dollar now for the rest of your life, that you can do that. That's it. Right? And I'll even help you start your first fund. Right? Trading your own money is important when you are trying to raise money in the future. Right? I don't think you're going to get someone to give you, let's say, $100,000 of their retirement account if you've been trading a demo for 3 years, right? But at the very least, you need to trade your own money, right? But if you put in, right, $5,000 and you were given another 20, right? Now you have 400% more than your own money, but you're also trading your own money. So that combination, if you traded that for 3 years, would be very interesting. And as I showed you, if you got 5% a month, your 25,000 turns into 400,000 in after 1,000 days. So if you can do that for me, my goal is to like set you up for life. Okay. The deplorables. I don't think I've ever seen the deplorables. So put that on your to-do list. I've been searching for years. Lots of people can't do it. Some people can. It's amazing. Right? And I'm not even telling you to do fundamentals. I'm telling you, I will assign you a bias. You just sit down every day and do it. You're a bull. Great. Buy at support. If it's not support, don't buy it. Is it going to be support today? Is it going to be support this week? Is it going to be support this month? You can scalp it, you can spot it, you can swing, you can carry but the only thing you can do are allowed to do is buy at support. I don't care what strategy you use to do that. I don't care what indicator you do. If it's the migration of African elephants, or the spread between the migration of Indian elephants and African elephants, or I don't care what you do. Now, preferably you do what I teach you. But look, if I tell you you can only buy the euro dollar, that you do that really, really well every day, every hour of every day for the rest of your life. I know I got someone that buys euro dollar at support, and then once their trade is in, they manage the risk. So when the market's bullish, that euro dollar trader makes great money. And when the market turns bearish, they get in trades, things don't quite work out. They make a little bit of money, but it's not a lot happens. And I'll say, well, that's the beta. You're not supposed to make a lot of money if you're a bull in a bearish market. But when you're a bull in a bullish market, you're supposed to make a lot of money. And if you could just do that, you're super consistent. Your volatility is super low, and you'll be an amazing trader. Your track record will be huge. But that's all I ask for. Somewhere between 1% and 5% a month. Right? So if you can do that, you should email me, wayne@fxbootcamp.com. That's all right. This was the sell yesterday, wasn't it? Wasn't this the trade plan yesterday? This, right? Well, Jimbo, I would just give you money and ask you to keep doing it. Jimbo, if you could do it, so like if you put in 5,000, I put in 20. And over 3 years, you turned the 25,000 into 400,000. Cool. I'm going to ask for the 20,000 back. You can keep everything else. I don't care. So you keep the 360,000. Do whatever you want with it. But then I'll probably give you like 3 million or something. You see what I mean? But you can go buy yourself a yellow Lamborghini if that's what you want. 360,000 is enough for a Gallardo. Even better than that. You probably get a used Murcielago. Get yourself a Murcielago, right? A real Lambo, and then I'll give you 10 times more money than you had now. So let's say 4 million. I'll say, here's your stock. Now you're making 4 million. Well, you'd work for me, so we'd negotiate. I'd give you a salary, I'd give you benefits, I'd give you travel around the world, lavish parties, and some some money. Well, I prefer, Jimbo, that I understand what you're doing. Because at the end of the day, if you lose money, I'm the one that gets buried in the sand dunes between Abu Dhabi and Dubai. Michael, you know what I wanted was a camouflage Lamborghini Murcielago with fluorescent orange trim, like maybe just stripes around the wheels, and maybe just somewhere, right? Just somewhere. The old school FX Bootcamp camo, you know, the woodland camo, that'd be pretty badass, I think. Just little dabs of fluorescent orange. Okay. So the interesting thing is I tried the model before, Jimbo. I tried the model where I got other traders that I didn't know. I looked at the track record of 10,000 traders and hired probably about 25 of them, maybe a little more over the course of a year or two. And the problem is I didn't understand their methodology. All I saw was their track record, and ultimately it didn't work. So what I would like to try next is 25 Wayne McDonald's trading 24 hours a day. I want 25 me's. So I would like to look at your chart, Jimbo, you being, you know, a mini-me. I'd like to look at your chart and say, oh, Jimbo sold here. I get what's going on. Okay. This is a breakout. This is a pullback. This is great. This is great. I see what you're doing. And say, oh, I get it. Right? That's what I prefer. That everyone is trading the way I trade, the way that I teach you to trade that way. So I understand, right? Yeah, and I'll be the Tyler Durden. I will work with all the clients and create custom portfolios for institutions. So like I said, I have a friend in Atlanta. He does, I don't know, $6 to $8 billion worth of business every year. But he does it in multiple countries, like quite a few countries. And he has so many currencies that he needs to hedge that he opened an office in Switzerland to hedge. And so he's got about 8 traders in Switzerland. All they do is hedge all his positions because he literally moves products around. So he'll get a contract, he'll fulfill the contract. It takes 3 months. They sign the deal on day 1, but let's say the product isn't delivered for 100 days, and meanwhile he doesn't get paid until he delivers. So the value of a currency can trade significantly over the course of 100 days, right? So he's got to hedge that contract over the future price. And so anyways, he's got so many people hedging his positions in Switzerland that Switzerland gave him a citizenship. And he's like, look at this. You know, so here's just this billionaire that's got multiple citizenships just because he moves so much money around. And by the way, this guy is cool. Like, he's in his mid-70s, and he'll go like segwaying with college kids because he's part of the leadership program I was in back in the day when I sat on a board with George Soros. This guy would have been, you know, anyway, so he eventually sat on that board too, but after me. But he would go out with college kids and segue through Washington, D.C. and stuff in his mid-70s, you know, and he's a billionaire, which is kind of cool. But imagine, though, that you can say, well, his company would be sort of like an institutional player. It wouldn't be a traditional, but let's say it's a corporate player, right? And a corporate player would want to come in and say, okay, we expect to do almost $10 billion next year in 2020 or 2020, right? And here's the 27 different currencies, and some of them are going to be obscure currencies and all this kind of stuff. And they'll say, well, we have exposure to this, we have exposure to that, but only for this amount of time and only for that amount of time, and more contracts are going to come in that and we only need to be hedged this amount of time. Well, they do it themselves now, but they just have dummies. So the guy comes in and says, all right, we got to deal with Poland, right? So we got zloty exposure for the next 100 days, hedge it, right? Which means if the value of the zloty falls, then they're going to get paid in zloty in 100 days. But if the value falls, they can lose significant amount of money on what they're being paid with, because they have to pay for the costs up front, right? So you want to hedge. You want to say if the zloty falls, the firm needs to offset the loss by making money. So they just blindly get the contract like, okay, $12 million worth of zloty. Okay, we need to hedge that. Sell Polish zloty. Hedged. So if the value falls, that offsets their losses in cash, right? But if it goes up, well, then they'll lose money in the hedge, but then they'll do better in cash, but it all washes out. They're literally hedged, right? So it's just dumb, don't you think? Like, you just lock in today's price. But what if you had someone smarter managing the money that said, okay, if the Polish zloty falls, hedge it. But if every minute by minute, or let's say hour by hour, day by day, over the course of 100 days, any time the zloty reverses and starts to go up, stop hedging! So now you make profit on the way up, and then if it falls again, hedge. So you don't lose money on the way down, but you do make money on the way up. Now we have like smart hedging. And wouldn't you love to walk into a company that does like $6 to $8 to $10 billion a year and say, I can make you money? Yeah, but you need an army of people where I say, so I say, okay, Alex or Michael, whoever it is, you're my zloty boy. Okay? You're my zloty boy. You sell, you buy. Right? And I need the zloty boys, like let's say it's Michael and Alex. Alex is the one that's shorting down, 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 down. Every time it falls, boom, 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 sell, 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 out, out, out. And Alex is the one buying, right? So Michael and Alex, maybe they're a zloty team, maybe they don't know each other at all. It doesn't matter. One person is selling when it's appropriate to sell. The other one is buying when it's appropriate. So when the seller is not selling, the other one is buying and making money. And this one, like, oh my God, it should work. If people can only do what they are planning to do. Like, all I'm asking you guys to do all day, every day is create a bias. And from that, create trade plans. We'll put plans, right? And then do it. This is all I ask for every day. And this gets ignored. This gets sloppily done, if at all. And then this is probably where most people are, just throw down trades every day and hope you're going to be consistent. I need the opposite. I need you to be super consistent on bias. Like, not once do you sell if you're a bull, ever. And all you do if you're a bull is buy at support. And you just can do it 1,000 times in a row, never making a mistake. Now, you might lose money, but you bought it at support, and then you manage the risk. The lower low, you're out. Okay? That's all I'm asking. That's all a professional does. When you walk in a bank, right, you're going to be PLZ. That's where they're going to start you. You're not going to get USD or Euro when you start, right? Right? Or they'll give you some Huff. Boom. Hungarian francs. Boom. You get a rock Eastern Europe. Okay? But you need to be very, very, very consistent in what you do because the market is inconsistent. And what you need to do, no matter if you work for me or you work for a bank, you work for yourself, you need to be consistent, and you need to have consistent results. And the market's not consistent, so you need to be consistent. And then everything comes down to the beta. You know what I mean? Well, in the United States, there's first in, first out, and then there's non-hedging. All right. So that, no. Okay. So anyways, that's where I need to get you guys, and that's where you need to get yourself. And you need to train yourself. You need to teach yourself that your worth is your bias. People will pay you for your opinion, especially if it's based on research. Okay? What's the euro going to do over the next 12 months? What's the dollar going to do over the 12 months? What's going on with Japanese yen? What's going on with the pound? What's going on with CAD? What's going on with Aussie? What's going on Kiwi? Well, I'm glad you brought that Kiwi up. I've been watching the dairy auctions since there's a high correlation between global dairy prices and the New Zealand dollar, but it's also impacted by China. So let's break this down into two things. Global dairy products, right? And the Chinese economy. And then you can talk about it intelligently. And you can boil that research into a bias. So someone will pay you if you said, well, my opinion in regards to the New Zealand dollar over the next 12 months is, right, is blah, 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 blah. That's worth money, guys. Now, the second thing is, even if you tell people what to do, they still can't do it. How many times have I told you that and this month it's going to be down, and this week it's going to be up, and all this kind of stuff, right? How many times? Thousands. And the vast, vast majority of people still don't do it. They just, even if you have a crystal ball, they don't do it. And I've proven it many times. I can give you a crystal ball. Many people still just can't do it. So then ultimately, what comes down to is, even if you can create the right bias, people will say, well, what can you just do it for us? And that's where the whole world works, guys. That's where it all works. That's where it gets really good for you. You have the ability to understand. And then you have the ability to carry it out. Fundamentals, technicals. Fund the techie. This is a career for you. Whether it's your company, someone else's company, a bank, a hedge fund, managed program, your personal account, you're going to need to know those two things. You're going to need to do those two things. Okay? Or I come in and say, you're trading Polish zloty. Is it PLZ? PZ? Yeah, Polish zloty. No, I just had it. Anyways, zloty, and you're a bear. Now, why would I say that? Well, I might have a client that does 270 million USD of Polish zloty deals per year, which means he's already long, right? He's long the futures, right? Because he's signing contracts that say, we will pay you when you deliver in 90 days. So he's long futures. He's going to get paid in the future. So, right, he needs to be short cash. Now, the cool thing is, with leverage, you say, well, here's the other thing. You only need 270 million. And I will smart hedge you. You will not lose your futures position. I will offset that by shorting every time it falls. But with your 27 million, I might be able to make some dollars and cents, pick up some pennies and quarters in the hours, days, and weeks where it goes up during this 90-day period. But your job would just be here. If I said you're a Zloty bear, that's because you're hedging the futures price. What do you care? Don't do anything else. Yes, pay attention to the Polish economy. Yes, pay attention to the Polish central bank, etc., etc., etc. But just do what you're told. You don't even have to come up with a bias. Just do what you're told. Sell at resistance. Manage your stop. Sell at resistance. Manage your stop. Sell at resistance. Manage your stop. Take profit at reversal pivot points. Right? Easy enough, right? So that's why you need to get serious. And I've always recommended you take this serious like a career. Okay? I remember telling you guys I did a similar speech, I think just as I started going to Harvard. And I said, look, you're going to need to work your butt off 100 hours a week developing a track record of success that's going to require work every single day. And you're going to need to do it for at least 4 years before it's going to have any value. And I said, and then look at me. I am paying a fortune to go to Harvard for 4 years. And I'm going to have to work 100 hours a week. I'm like, if I can bang out Harvard, you can bang this out. It's only 4 years. And it's not going to cost you a fortune. So I get my first degree in May. And my second degree in May 2020. So I'm down to, it's already been 2.5 years, right? It's already been 2.5 years. See, if you had started 2.5 years ago, you'd be almost, right? You'd be 2.5 years into developing, let's say, a 3-year track record as a minimum, but you could at least start seeing the future. You can start talking to people. Here's what I've done. I've been trading for almost 3 years. Here's what I've done. Here's my steady returns every month, somewhere between 1% and 5%. Boy, you'd be so close now, right? But most people, they never try, they never start because they think, oh my God, it's going to take me 4 years. I would have to work really, really hard every day for 4 years before I have even a chance of, turning that track record into making good money. Well, Harvard cost me a lot of money. When I graduate, Harvard doesn't give me any of their $64 billion endowment. Like, no, Harvard doesn't pay me. I don't come out with a degree and like someone just showers me with money. It's a starting point for most people. So get started, guys, because if you need a 3 or 4 year track record, you need to start today. Go to tradersway.com, open an account. If you need someone to invest along with you so you're trading other people's money, email me, wayne@fxbootcamp.com. But you need to start your track record of success now. What's PA? Per annum? It's a lot of money. Yeah, why not, Michael? You can't do 1% a month or 2% a month trading one pair? Really? Well, Michael, it shouldn't matter what your leverage, even if it's 1,000 to 1, you would never be using it, right? So what matters is your lot size relative to your account size, right? So really, like, if you had $5,000 in your trading account, should you be trading 2 standard lots? No. Now, in the beginning, right, like let's say you had 25,000, you should be trading mini lots for sure. But, I made a comment. Somebody emailed me about it the other day. But I made a comment maybe a week or two ago that I used to have a rule for every $100,000 in cash in my account, I would trade 1 mini lot. And my guess is you're trading more than a mini lot, and you probably have less than 100,000 in cash. And then you're like, well, Wayne, that doesn't make any sense. You'd be making like $50 a day per 100,000 in cash. Like it'd be nothing. Oh, well, I'd have 100 trades open. So you might get down to you have one trade with one standard lot and you're trying to make 20 pips a day. I'm trading mini lots, but I'm trying to make 200 pips a day. Right? Your good month might be 500 pips. I've had months that are well over 10,000 pips. So I'm trying to make 10,000 pips a month. You're trying to make 200. So your leverage per trade, your risk per trade is so significantly higher that a bad month might be, 3 of your trades didn't work out. And now you've had a bad month, right? So I'm looking at bigger time frames. I'm looking at bigger moves. I'm looking at, larger but stacked positions, right? That kind of stuff. Like the greatest feeling in the world is waking up, opening your account and see that you're up 1,000 pips for the day and you haven't even started trading. That's because you're in lots of small positions that build up to a portfolio. But that's what a portfolio is, guys, right? Right? If you owned 10,000 shares of Apple, is that a portfolio or is that a position? That's a position. What if Apple drops $100 in a month? It can happen. Okay. But what if you were in 10,000 shares of various companies in the S&P 500? Okay. You see what I mean? So in that case, when I'm building things up, like very often I'm building in the summer, right? When everyone else is crying and whining about you can't trade anymore, all the markets are dead. I'm usually building positions and all that kind of stuff. And then at this time of year, I've unwound all my positions and right, and I'm doing shorter to medium term trade plans into the summer where then I can regather. And really sort of like June to June is my year, really, if you think about it. And so I look at macros and I put together macro plans and I come up with biases for basic things like maybe risk on or risk off, right? Being the key, risk. And I make a bias and then I buy that dip and I buy that dip and I buy that dip and I buy that dip on this pair, 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 and this pair, and the next day I buy the next dip and the next dip, next dip, next dip, next. 9 months go by and I have 100 open trades. Okay, but each individual trade is worth what? 0.0001%. So if I have 3 losing trades, I don't even notice it. It doesn't even exist. Okay. Right? You see what I mean? Yeah, well, March 29th. But we know they're going to kick the can down the right. Don't, and I've said this in the past, guys, don't underestimate the ability for people to, move the tough decisions down the line. So they're not ready for March 29th. They're not ready. So anyways, just a little food for thought. Take it serious. And it's 8:48 and all that. So let's call it a day. I got to do some research, and I might have to do a meeting and all that kind of stuff. But if things go well, maybe I'll golf today. I don't know. And then tomorrow is Friday. Another wonderful Friday. Swing trading group meets tomorrow. So right. So that's cool. So make sure you visit Trader's Way, guys. Open an account. Start your serious trading. Right? Maybe opening a new account just as a way to mentally start fresh, and you really start mentally, maybe even spiritually, really taking your trading serious. Like change your hat. Like I'd even have these things matter sometimes. I'd even put a hat in my office. When I walk in, I'd put the hat on, and now I'm the professional trader I want to be. Right? Like you might laugh, and it is funny, but I think it's interesting how the brain works, right? So you put the hat on, and now you have to be the trader you want to be, not the trader you are. You have to rewire your brain. So you put this on, and now you're a beast of a Polish Zloty bear or something, right? I don't know. Oh, in regard to 100 trades open after 9 months after buying dips, it seems foreign to me, because why would the market not turn? So, well, I didn't say 9 months, Michael. And so, right, yeah. Hey, Daniel, I haven't even checked. My phone was dead. My charger died and didn't charge my phone, so I don't know if you got back to me, but I'd like to know if you got word on that thing I pinged you about. I'll double check. So anyways, see you guys. See you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Comms, you opened account, but every time I try to log in, I fail. Oh, thank you, Daniel. Are you talking about Trader's Way or FX Bootcamp? The Trader's Way account wouldn't have that problem. Sometimes, but on the FX Bootcamp side. Anyways, that's weird. Well, comms, if either way, if it's a Trader's Way issue, contact support. If it's an FX Bootcamp, then contact me. Yeah, well, contact support. We have world-class customer service. All right, take care, guys. See you tomorrow. Gotta go. Don't forget to give the little thumbs up thing, all right? Do the little thumbs up thing. It takes just not even a second. You would have been done 10 times already by now. Okay? Cheers.